Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, it's President's Day, right? So the stock market's closed today. Nothing's going on, right? But what's happening? They're really trying to push the market up higher. They're trying to push it up one more time. Get it up on the S&P, maybe 6,300, maybe 6,400. But eventually this will come down. This will come down. My take is it's going to be coming down in the next 3 to 6 months, maybe sooner, right? We're getting to the top of the market, and soon we're going to be ushering in what's known as a bear market. Now, a lot of people watching this are young. They've never seen a bear market. We haven't had one in 16 years. A lot of people say we've had two in that time period, but I disagree. They were just short corrections that got bounced right back up. They printed more money and inflated it higher, right? So we've never really had a real bear market for 16 years. This is the longest bull market in the history of the world, and it's coming to an end relatively soon. 3 to 6 months would be my guess, maybe a little earlier. Maybe we only have a month left. Maybe we only have a week left, but they're going to try to push it up one more time. Now, how's the economy really doing? You see, that's the stock market, and the economy is a little bit different. You see, the economy is all it is just debt driven, right? Okay, I mean, think about it. Credit card debt. Credit card debt just hit a new record high this month, $1.21 trillion. So it's at the record high, right? The most it's ever been. And yet interest rates on credit cards are at the record high also, almost 23%. Now, why are the most people on record are making the very minimum payment, the least amount they can pay? They owe $10,000. It says they can pay $200 of it. They make the minimum payment, $200, and they keep the balance at $9,800, right? Why are they making the minimum payment? Why? Because they don't have any money, right? They don't have any money. There's a lot of pain out there right now, and the pain is we got to increase the debt, right? So $1.21 trillion. That's a record on the credit cards. Car loans, $1.7 trillion. That's a record on the car loans. Student loans, over $1 trillion. Now, I know you think that's all. Some people think that's chump change, right? I mean, you add those three up and you're under right about 4 trillion, let's call it. Now, the government, maybe they're going to do a debt jubilee and just wipe out all those debt. Wipe out the student loans, wipe out the car loans, wipe out the credit card loans. $4 trillion, that's nothing to the government. See, the government, they can print as much money as they want. And people tell me that the debt doesn't really matter, right? The debt doesn't matter. We're going on $37 trillion. And that's just the federal debt. That doesn't take into account the state debt. The corporations are all in debt. Our whole country is based upon debt, right? And people tell me, but Mike, the debt doesn't matter anymore. People were worried about the debt when we got up to $1 trillion. You got to go back to about 1980, I guess, to find those numbers. But then we got to 10 trillion and people were worried. We're at 37 trillion and now they're saying, don't worry, debt doesn't matter. Well, if it doesn't matter, why do we pay income taxes? Why not just print more money and then we just add to the debt, right? I mean, we don't need to pay income tax if they can just print the money and the debt doesn't matter. But my point is, at some point, the debt does matter, and they're going to want to get as much income tax out of you as they can, as much property tax out of you as they can. You see, if debt didn't matter, we wouldn't need to pay taxes. They could just print the money into existence, and then we just go on our merry way, and we don't worry about debt. But you see, I'm an Austrian economist, right? And the debt matters to us. Now, the Keynesians, they may tell you that the debt doesn't matter. The modern monetary theorists, they may tell you that the debt doesn't matter. But I'm here to tell you the debt does matter, and it's going to come into play, and it's going to take effect. But right now, credit cards, big problem. People don't have money. You see, 60% of the people in the United States, they live paycheck to paycheck. Now, they stop getting that paycheck. They circle the drain until they're homeless, right? But right now, they're living on their credit cards, and they're living on them, maxing them out, making the minimum payment. So in other words, the economy not doing so well. Stock market, that's doing really well, right? Now it cracks me up. It cracks me up. I love the stock market. One of my favorite things to watch, right? I mean, I've been a stock market observer since, guys, probably 16, 15 even. I was fascinated with the stock market because it was a way to make money. It was a way to fix my gambling habit, right? I could gamble in the stock market, and that's not gambling. That's speculating, right? That's investing, right? No, you're gambling right now. Let me point out some things. You see, there's 7 stocks that hold this market up, and they're way, way, way overvalued. You go on the Buffett indicator, 210% of the value to the GDP. That's over double what normal is. Below 100 is cheap. Above 100 is expensive. And we're at 210%, but maybe Warren, just an old man. He doesn't know anything. He's sitting on 300 billion in cash. Think of all that money he could be making if he just put it into the cryptos, maybe put it into the Bitcoin. But I want to show you how the stock market can be so extreme one direction or the other. In other words, it can overshoot to the high side, but it can also overshoot to the downside. Now I'm going to talk about one of my favorite stocks to observe here. Let's talk about MicroStrategies, right? Okay, MicroStrategies was this, well, it's owned by, Michael Saylor runs the company, right? Now it was a computer company. It was a failed company. It was a zombie company. Didn't bring in any cash flow, had no way to pay its debt. So what they do, they decided to borrow money and buy a bunch of Bitcoin. They bought 478,000 Bitcoins they own. 478,000 Bitcoin. About $45 billion in value, right? I mean, value doesn't have any real worth, but it has a number to it. Doesn't really have value. It's got a price, 45 billion in price. And I love that because Bitcoin, one of the best things to gamble on. This is the thing I trade the most right now because it moves the most up and down, 80% up, 80% down. I mean, it's very volatile, right? But he owns $45 billion in Bitcoin. Okay, now here's the thing that's fascinating. Wall Street is selling the stock over $80 billion market cap. So in other words, when you buy MicroStrategies, it's like buying Bitcoin, not at 100,000, but at $200,000 per Bitcoin. That's what Wall Street has placed the value on it. But Mike, they have computer software company. I'm sure that's worth the other 40 billion. Well, it's losing money. Always lost money, never made any money. So maybe it is worth 40 billion, but I'd beg to differ. They're pricing the Bitcoin, 45 billion of Bitcoin at over $80 billion, almost double, right? Wall Street has this wrong. And at some point, it will reflect it. Now, they were pricing it up over $100 billion. See, MicroStrategies got up to $500, and that was the day that I went short MicroStrategies. Now, this was just probably a stupid thing to do, but that day I went short MicroStrategies, and at the end of the day, it closed below $400. Now, right now, it's trading around, I don't know, 300, 340. Okay, so it keeps coming down, but it's still way overpriced, right? Now, don't get me wrong. Don't short it here. Do not short it. I am telling you, do not short it. You will get your butt handed to you. I think it's going to have another run up to the $500 level. I think Bitcoin's going to have another run, probably up to 120,000 before the bear market comes, before the recession comes, before it all comes tumbling down. And as soon as it starts to crack, of course, the Fed's going to go into high gear. They'll have emergency meeting to cut rates. They'll cut them by 100 basis points. They'll have another one, 100 basis points. They'll get that back to zero as soon as they can. The problem is the long end. Long end's going up. And yes, I think mortgages will be at 10% soon. I think they will continue up higher. But the Fed will be out there cutting the rates as fast as they can. And they'll be printing the money as fast as they can because they cannot see this deflationary effect that's going to come in. And I agree there's going to be some deflationary effect, but then they're going to print what? 30 trillion, 40 trillion, 50 trillion, and they will see if the debt does matter at that point. They will double the debt we're in. We'll go from 37 trillion to 70 trillion to 100 trillion in debt. At some point, we're going to find out exactly where it matters, how much debt we're going to be in, right? But Mike, we got those Doge boys. They're going to cut all the spending and we're not going to have that anymore. You watch when the assets come tumbling down, we're going to go right back into well, we're going to just print the money. And yes, that will lead to hyperinflation. That will lead to prices going back up. They will try to inflate the bubble bigger because they don't want it coming down. But my point is, you look at the stock market, they're valuing the MicroStrategy Bitcoin at twice the regular Bitcoin, which I think is funny because the regular Bitcoin's way overvalued. But anyways, the MicroStrategy Bitcoin, they're going about 200,000 a Bitcoin, is way overvalued. Now I get the comments, I'm a big gold guy, and don't get me wrong, I love Bitcoin, love gambling in it. You can bet it both ways. So easy to do. You can just put the options, call options, put options. They'll move. Oh, they move fast. It's exciting. It's fun. If you know how to time it, where it's going to go. And I've been wrong a few times, but I've made a fortune in it so far. We make a little here, make a little here, lose a little, make a little, make a little, make a little. It's fun, right? Because it moves so much. But here's the thing. I'm a gold and silver guy because I like real things. I like real money. I like to feel it, to touch it. It's real. It's not that phony stuff. You get them digits on the screen. You go, oh, it's all exciting. I got digits on the screen. Oh, boy. No, I like the real stuff. I like real wealth. Okay, so let's talk about the gold market. You see, I get the comments, Mike, I can't afford to buy gold. It's at a record high. Yeah, to get a physical ounce. Now I get a physical ounce. It's over $3,000, about $3,100 to get an ounce in your hand that you can hold. Yeah, it's come down a little bit though. We had that down day on Friday, dropped about $40 there, and I'm hoping it pulls back a little more so I can get some more of that shiny stuff to hold in my hand. Love that stuff. But here's the thing. Okay, so Wall Street again. I love Wall Street. I love the stock market. See, they got this backwards, right? They got that MicroStrategy Bitcoin going at 200,000, but they got the gold stocks. The gold stocks, they think that gold is still at 1,500, right? Gold's up here closer to 3,000, but these miners, they're pulling this stuff out of the ground at about $1,500. That's half off on gold. The miners haven't taken off yet. Believe me, they will take off. Even as the stock market comes down, those are going to be going up. Why? Because gold is just in the first inning. Gold's going to have a bull run. It's going to shoot through 3,000. It may pull back here, and that'd be great, give you a little opportunity, but it's going to shoot past 3,000, past 4,000. It's going to get up to 5,000, probably going to pass that. Eventually, this is over time, of course, but what are the miners? They're pulling it out of the ground at $1,500. $1,500 is what the average miner is taking it out of the ground at. Well, those are kind of a bargain. Look at Barrick Gold. Oh, they just came out with their earnings last week, right? Blew the numbers out of the water when they announced. They said, hey, we got an extra $1 billion lying around in cash. I think our stock is really cheap. We're going to buy $1 billion of it. And I thought that's pretty cool. I'm not recommending Barrick. There's a lot better ones. I mean, you can just go out. What I do like, you can buy the GDX, the GDXJ, the SIL if you like the silver side of things. I do. I really like the SIL, SILV. Those are the silver miners, right? But those four are the things, if you don't want to do your research, just buy these. They're going to take off. This is just my opinion, not investment advice. But the average gold company is taking it out of the ground at $1,500. Look they got to raise the prices on these miners because gold's up here. Look now the MicroStrategies, it's kind of went the other way, right? It's got $200,000 Bitcoin. Eventually that company's going to be in a world of hurt, but no, don't short it, not yet anyway. Wait till it gets back above 500. They'll probably get there on the next run up. But eventually I feel sorry for Michael Saylor. Everybody thinks he's a genius, and he probably is. I'm not saying he's not. I'm just saying when you play with that much leverage in a company and something that moves 80% up and down, you're going to lose your butt eventually, and you're going to lose your company. It's going to be really sad. People tell tell me that's impossible. We'll see how it plays out. It's early in the game. It's only maybe the third inning there, right? I mean, Bitcoin's not the center of the universe, contrary to what Michael Saylor believes. He actually believes that. I mean, that's kind of funny to me. Bitcoin, it's just an investment. You can bet it to go up, bet it to go down, and it's going to move. It's going to move big. It's going to move 5-10% a day. Going to move 80% one direction, 80% the other direction. I love that stuff. If you like this stuff, give me the thumbs up and punch the subscribe button and get out there, everybody. Enjoy your day, and we'll talk again real soon. Bye-bye now.